Hello, welcome. Today, I want to help you gather up as much cash as you can at the end of the year. Um, this is an annual practice, and the boring accounting phrase for it is year-end tax planning. So I'm going to keep this episode as short and snappy as I can for you, but I want you to know that I've created a resource for you that you can grab for yourself in the show notes. So if you want the full checklist with all the dirty details and all the detailing numbers, you don't even have to hand over your email address to get it. Just click into the show notes and you will find my year-end tax planning checklist for you. All right, so let's get started. First of all, what is year-end tax planning? Basically, it's a way of maximizing the cash that you actually have as opposed to hustling for more. And so for that reason, I really love it. To be honest, year-end tax planning is something that, really well-heeled people do every year. This is something that if you have a fancy accountant that you pay for consulting and stuff beyond just a tax return, you are doing this, right? And so basically this is a strategy of the wealthy, but it's available. These tools are available to everyone and you can take advantage of them. It's just that if you don't have an accountant who you have, deep one-on-one guidance with, and most of us don't, then you might not have access to this information or have made it a regular habit. And of course, in my program, Money Bootcamp, I do teach a whole module on year-end tax planning, but I want to preview for you today what it involves because it's really helpful and I want you to get the most out of this. All right. So first, before we get started, I just want to counsel you as if year-end tax planning is brand new to you, be gentle with yourself, okay? Nobody is ever perfect. The first time you do any of this stuff, it's not going to necessarily go as well as you might wish. The whole point, though, is to just take a stab, rough as it is, and improve from there, okay? Perfection is a myth. It doesn't exist, and you will never achieve it, but you can achieve improvement every single time. So that's my counsel for you as a sort of mindset, a headspace to be in as you get into year-end tax planning. And remember, this is something you can tweak and adjust every single year for the rest of your life. So, all right, so let's jump in. Okay, first and most important, when you are self-employed, the most important thing about year-end tax planning is you want to do your bookkeeping as early as you can. Don't wait to do your final quarter bookkeeping until January, because then you will miss the opportunities that you have to sneak things in before the tax year ends. And that is the whole purpose of year-end tax planning. The idea is that you get your bookkeeping done for most of the year, right? Most of the year has happened already, and you have a little window of time still left where you can make some adjustments, right? You can kind of see and evaluate where you are, and you can dial things up and down at the end of the year. So this is less about massive, enormous changes than about tweaking the dials. But I want to remind you that if you tweak the dials every year and you start to anticipate tweaking the dials the next year, you get better and better at this, and you end up finding more and more money. And it basically is a virtuous cycle where this starts to snowball and get better every year. So this year you may look at this, you might be like, oh my God, my books are a mess. I'm not even going to manage that. Okay, now you know next year, you definitely want your books to be a little more orderly as we approach the end of the year. You might want to put some extra time on your calendar in November next year to get those books sort of up to date so you can still do some planning in December. Okay, so number one on the checklist, do your bookkeeping. So make sure year-end tax planning really hinges on knowing how much profit you've made in your business. And so having your books up to date, year to date, is key. Okay, so that's really the biggest and best way to do planning at all. I want to remind you that I have a free visual guide to your tax deductions. If you need some help kind of setting up your categories and your bookkeeping, you can always download that. That's also in my show notes, but you can get it at sunlighttax.com deductions guide. So just if you need a little help with those categories, I just want to point you to that resource. Okay, so what do you do once you have your bookkeeping up to date? Well, you're going to evaluate your profit. Okay, so there's a couple of things you can do with that, and one of them is you can defer income to January where possible. This is not something you're going to be able to do a lot about, but you can do a little. You can kind of do some marginal tweaking, right? So if you find after you've done your books that you have maybe more income than you thought, then that means your tax bill is going to be maybe higher than you thought, right? And so what do you do with that information? Well, you have two levers to pull. One, you're going to defer whatever income you can to after January 1st so that it doesn't hit your books until the next tax year. So you could do this by, for example, sending out your invoices a little bit later, delaying invoicing just at year end, okay? So that's one way that you can do it. And then the other thing you want to do is you can reduce your taxable income by making expenses, buying things that you are going to use that you were planning to buy anyway. So accelerating purchases to now, right? So in other words, deferring income is taking that top line income, your gross income, and it is keeping it small, preventing it from swelling. And when you accelerate expenses, you are increasing that bottom part that affects the bottom line. And so that you're essentially with both of those levers, you are keeping your profit a little bit lower. Okay. Now I want to counsel you, don't just go and spend all your money. Like the point is not to report zero income. That really is not. And there's some important reasons why you don't want to do that. But if there are things you planned to buy anyway, right? If you were already going to do it, maybe in February, you can accelerate certain purchases into December or pay in full upfront for all of next year. If it's a thing that you know you're going to do anyway, and maybe you get that, full annual payment discount when you pay in full. So expenses like that are great. And so if there's a coaching program you wanted to join, if there is an insurance payment and you can, for example, make a full payment for the year ahead, those are good ways to accelerate your purchases in December to sort of decrease the amount of profit that you show at the end of the year, and therefore to reduce the tax that you're going to owe. Okay. Next, preparing your charitable donations and planned giving. Now, this is important, but I really want to caution you that for most of you, this is not going to be relevant in terms of year-end tax planning. If you're in the 1%, if you're in the 10% of taxpayers who itemize, then you get a deduction for your charitable donations. And so this will be a big factor for you, for that 10% of you. But I want to just remind you that most of you listening do not itemize, okay? And charitable contributions are only deductible if you itemize. Most of us take the standard deduction. That includes me, y'all. I did a whole episode on itemized deductions and what those are and how you should not confuse them with business deductions. But itemized deductions are basically one of four things. They are either charitable contributions, mortgage interest, state and local taxes capped at $10,000, and medical expenses only once they exceed 7.5% of your adjusted gross income. That's kind of a mouthful, but basically the things in those four things all go into one bucket. And if that bucket gets bigger than the standard deduction amount, then you're going to itemize instead of taking the standard deduction, okay? Most of us don't have itemizable expenses, including those four things that are bigger than the standard deduction, because the standard deduction is pretty big, okay? So 90% of taxpayers take the standard deduction. So basically, charitable contributions, you're getting a lot of solicitations in the mail at this time of year, I know, and by all means, be charitable, give to charity. That is absolutely a wonderful thing to do, but know where you stand in terms of whether that charitable deduction is actually deductible to you or not. So you might want to go check on last year's tax return. Did I itemize last year or did I take the standard deduction? And that's going to give you a clue about how you stand this year. though it can change. It's not fixed. Okay, so go back and review that episode about itemizing if you need more info on that. I just want to make you aware that that episode does exist. Okay, there are some other ways to reduce your taxable income. They are in the checklist that I am including for you here in the show notes. So take a look at those other really little detail-y ways that you can also reduce your taxable income. These are things like a health savings account, if you have a high deductible healthcare plan, contributing to a Roth or a SEP IRA or a solo 401k. And then also there's stuff that you can do about employee income if you have a day job with a W-2, or if you are married to somebody and you filed jointly with someone who has a W-2, who's an employee. There are ways. The year end is a time you want to make sure you've maximized any workplace benefits that you or your spouse have. Now, I know most of you listening are listening because you're self-employed. And so a lot of you do not have any employee stuff, but a lot of times, even if you're self-employed, you might be married to somebody who's an employee. And so it's still something you want to think about. I'm not going to get into all the details there because it doesn't make for a really exciting episode, but please know that if you go to the show notes for this episode, you will get this checklist and you can see the details there. All right. Another thing you want to do at year end is review your health insurance at your workplace or on the marketplace. November and sometimes into early December is open enrollment period for healthcare. So that is a major part. One, it's a major part of your financial health, really honestly, and that is because the number one cause of bankruptcy in the United States is a lack of health insurance, is medical bills, medical debt. So health insurance is actually part of your financial picture as much as you might not want to think about that. So this is a good time to review your options and see if you can do a little better with your health insurance. Okay, another thing a lot of people do not think about with year-end tax planning, but I want to counsel you to think about it now, because thinking about it now is going to prevent a yucky surprise on April 15th. So let's talk about that. On April 15th, you are going to need a big chunk of cash. And if you plan for that now, you are so much more likely to have all the cash you need and to pay yourself first. This is a wonderful principle of personal finance. And basically what it means is when you're dividing your money into the various buckets that you have to fund, your retirement, your tax bill, your emergency fund, paying yourself first means paying those things that go to you before you pay your tax bill, your, expenses, things like that. You don't have a lot of option about paying your tax bill. You have to, and it's due on April 15th, no matter what. And just a little side note, a lot of people think getting a tax extension means that it extends the due date for your payment. And that is not true. Your tax payment is always, always, always due on April 15th, no matter what. And the only thing you're getting an extension on is the paperwork. You can file for an extension for the paperwork for an extra 6 months so that you don't have to put in the tax return until October 15th, but that does not extend your payment deadline. And if you wait until October 15th to actually make the payment, you are actually incurring interest and penalties that whole 6-month period because you're late, right? So even if you do file for an extension, on the paperwork, you still must make your tax payment on April 15th. And if you're on extension, you're going to need to make a guesstimate about what you owe. And if you guess over what you actually owe, then you won't owe interest and penalties. But the IRS is going to hold on to that money until you file and then give you a refund for whatever was too much. Okay, so that's just a little background on why April 15th really is the date, and that's not a flexible thing. Okay, so here's what you need to know. You've got, at this point, if you're listening to this episode in December, you've got 4 or 5 months until April 15th to plan for this. So here's what is coming on April 15th. Your tax bill for the year that just happened, so for 2022. Your first estimated quarterly payment is due on tax day as well. So not just last year's tax bill, but this year's first quarterly payment is also due on April 15th. In addition to that, your IRA funding is due by April 15th. So if you're using a Roth or a traditional IRA, the 2022 limit of money that you can put in there is $6,000, or if you're over 50, it's $7,000. And that money must be put in by April 15th. So that's really important to know. So what you want to do is you want to add up those three numbers together. If you can make an estimate about what your tax bill might be on April 15th, guesstimate how much you might owe, guesstimate your first estimated quarterly tax bill, and that would generally be a quarter of what you owed this year. That's a sort of baseline way to estimate that. And then add in that IRA chunk of money, $6,000 if you're under 50, $7,000 if you're over. And of course, if you can't pay that full amount, then, whatever amount you think you might be able to afford. So here's what you do. You take those three numbers, add them together. And if you've got 4 months, if when you're listening to this episode, there are 4 months until April 15th, then take that number and divide it by 4. And that's the amount of money per month from now, starting now, that you want to be sure you're setting aside so that you're going to have enough money, not just to cover your tax bill, which you're not going to get forgiveness over, right? The IRS doesn't say, oh, whoopsie, that's okay. So your tax bill, your first quarterly payment, and your IRA, right? Because that is the part where you're paying yourself. And if you don't plan for that, what's going to happen, and I see this all the time in my tax practice, is that you scrape together, if you don't have enough money at that date, whatever your intention was to fund your retirement this year, that IRS bill comes and you're like, ugh, I'm paying that. You're going to pay that first, and you're going to pay your quarterly first. And the person who's going to get screwed is you, and you are not going to have the money to put into your IRA. And that will be yet another year that goes by where you didn't fund your IRA, where you didn't fund your retirement, or as I like to say, your fuck you money. Okay, so that is just a little mental math to do to kind of get ready for that chunk of cash that you're going to need on April 15th. All right, and the last thing I want to talk to you about today is getting ready for your 1099s. This is not actually technically a part of year-end tax planning, but I like to include it here because if you are in the boat, and most of us who are, self-employed do hire contractors through the year, we might have people we need to pay, issue 1099s to, who we've paid over the year. This little bit of prep can really help your January it can help your January go better. So here's how you get ready for issuing your 1099s. If you paid anyone over $600 to do work for your business this year, you're going to need to issue them a 1099, and FYI, you need to issue it by January 31st. So this is a task for January, no question. The IRS is also going to get a copy of that 1099 because you're going to send it to them. So there are a couple exceptions to people who, there's a couple ways to know that you don't need to send someone a 1099, and that is if they are a C corporation, an S corporation, or if you paid them by credit card or a third-party payment processor. Be careful that Venmo and Cash App and PayPal Friends and Family do not count in that category, but PayPal Business does, okay? So there's a little technical rule. I don't want to bore you with it, but basically if you pay through a payment processor, a third-party payment processor like a credit card or PayPal Business, it actually becomes the obligation of that processor to issue the 1099, and it takes the burden off of you. This is why some of us really love paying people by credit card. Not naming any names. So that's just a little detail for you to know. But basically, if you paid anybody over $600 to do work for your business, so that's not personal. If you paid a hairdresser over $600 throughout the course of the year, that's personal, right? That you don't owe that person a 1099. If you, paid a graphic designer to do some work for you and you paid them over $600, yes, you do owe them a 1099. All right. So to get ready for 1099s, what you want to do is look inside your books and be sure you've tracked all the payments you've made to contractors. This is the time to start tallying that up. You want to make yourself a list of all the people you paid over $600 cumulatively throughout this year. Okay. So you're going to make that list, and that's your list, your baseline list of who you might owe a 1099 to. Now, some of them you may have paid by credit card, or they may be an S Corp or a C Corp, and therefore you don't actually owe them a 1099, but you want to know what that list of potential people is. Okay, so now the next thing to do is to enter January prepared. You may want to actually reach out to those people to be sure you have their updated mailing address, and you want to get a W-9 on file for them. So you want to have them fill out a W-9 and send it to you. That is not a form that goes to the IRS. That's a form that goes to you for your records. And the W-9 has the info you need to issue that person a W-9. Also, it has the info to say whether they're an S Corp or a C Corp, which is not necessarily something that you know, right? So Sunlight Tax, I am actually an S Corp. And so nobody has to issue me a 1099. Many people don't know that, and it's really annoying. I get 1099s anyway from people who should know better. And I have to write a special letter to the IRS explaining why it doesn't go on my S Corp tax return. But anyway, that's a little personal beef. Because, other people don't always know the tax rules, and you might get 1099s you don't need. Anyway, the W-9 has that information to say whether or not it's a person that you actually have to send a W-9 to. Okay. Now, in case, you can always grab a W-9 off the IRS website. You can send the blank version over email to the person, but don't get it emailed back because it's got sensitive info on it. You want to have it sent to you securely through, Dropbox, or just dropped in the mail, snail mail. And I also just want to shout out a service that I use and really, really like, called Track 1099. Costs about $2-3 per 1099 to issue to somebody through that service. I absolutely love it. There is no service worth, it's so worth it to me, just a couple bucks per 1099. So I recommend that service. And you can also go to Track 1099 and you can have them do a secure W-9 through their system as well. So it's just like a nice little tip for you. Also, just in case, just to make it easy for you, I have linked to the blank W-9 form here on this year-end tax planning checklist I have for you. So if you just go in the show notes, you can just get that W-9 form right there, and you can do all that for free. All right, so that's it. Those are my tips for you for the end of the year, year-end tax planning, to gather up a little bit of extra cash, reduce your taxable income as much as possible. And just to remind you, in the show notes, you don't have to give me an email address or anything. Just go in the show notes and you can just click that link. And I'm sharing with you a year-end tax planning checklist that is really comprehensive, and it has all the little details about what to do with employee income and benefits and healthcare, all the links that you could want. All right. I hope that was really helpful for you. And I hope that this helps you gather up a little extra money at the end of the year and enter 2023 feeling just a little bit more together and prepared. All right. Thanks for listening, everybody. Bye-bye.